The United States Federal Reserve is considering the creation of a digital dollar.
So what you just saw was some comments on some videos about central bank digital currencies. As you can tell, people aren't really receptive to the idea.
Oh, digital currency. If they have control of your money because it's digital, you can't stash it under your bed. If they don't like what you say, they can turn it off and you're impoverished.
They're worried that this is a technology that might replace cash. But here's what interests me. According to a recent study, more than 130 countries are currently exploring creating a digital currency. That's 130 countries that make up 98% of the global economy. So whether people like it or not, cash might undergo its biggest transformation in centuries. And if you live in one of these countries, you've already been impacted. But let's take a step back here, remove all the emotive language, and take a look at it rationally. What are central bank digital currencies? Will they actually replace cash? And why are some people so worried?
This is a story about the potential future of banking.
And the arguments for it are clear.
A form of money you cannot see. Central bank digital currencies.
Chancellor of the Exchequer and the Bank of England have said Britcoin will be up and running.
Okay, let's start at the beginning. A central bank digital currency, or a CBDC, is money that's issued directly from the central bank, but digitally rather than physically. Let's do a quick sidebar here, because you're probably wondering, digital currency? I've got a bank account that allows me to access my money digitally, and I use Apple Pay and PayPal to pay for things digitally. What's the difference? I think it's best explained using this table. If we go across the table, we have the two types of money, commercial bank and central bank money. The difference is who ultimately owes you the right to spend money. Going down, we have money that you can hold, physical, or money that you see on a screen, digital. What you see in your bank account is digital commercial bank money, so that goes in the bottom left square. When you withdraw cash from an ATM, you're actually converting commercial bank money to central bank money, and obviously it's physical, so that goes in the top right square. You can see on the corner of this banknote, it's signed by the governor of my central bank. You're not going to find any money in your bank account signed by a central bank. CBDCs fall in the bottom right square. It's lines of code programmed from central banks into digital wallets on your phone using blockchain technology, similar to cryptocurrencies. Unlike money in your bank account, you can't go to an ATM to cash out your CBDCs. It's digital and digital only. But this just raises more questions, like, are governments creating their own cryptocurrencies? Is this just a bank account but with extra steps? What happens to regular banks in all of this? This sounds like regular money but with more restrictions. What's the point? Again, does this mean we're heading to a cashless society? Or these questions and more are what the 130 countries are currently looking into. We'll answer what we currently know, and after looking at all the details, we'll try to determine if CBDCs will actually lead us to a cashless society. Firstly, yeah, governments are creating their own cryptocurrencies, specifically stablecoins. Sort of. Stablecoins are a type of cryptocurrency that peg their value one-to-one with regular currencies, like the US dollar. It's like a way of owning the US dollar without actually owning the US dollar. Stablecoins have exploded in recent years, and governments have been increasingly concerned about them. Like, when you had companies like Meta that tried to launch their own stablecoins, it's no wonder that central banks are considering launching their own. A pro-CBDC person would argue that central banks are worried about the instability crypto brings to the financial system, when stablecoins, seemingly out of nowhere, can do this. Someone who's more cynical might argue that central banks want to expand their control of the financial system away from private companies. And honestly, there's probably some truth to both of these arguments. CBDCs and cryptocurrencies are similar in that they both use blockchain technology to record and verify transactions. However, the main difference is that cryptocurrencies are decentralized, meaning anyone with a computer can verify transactions on that cryptocurrency's ledger. CBDCs, on the other hand, are centralized entirely within the central bank. This is a major difference. Decentralization is arguably the defining feature of most cryptocurrencies like Bitcoin, with the white papers essentially denouncing the centralized financial system we live in. So you can imagine why a lot of crypto purists, tech bros, and libertarians would be angry about having their relationship with the government grow. With legitimate reasons, of course, which we'll get to in a bit. But first we need to distinguish between the two types of central bank money, retail and wholesale. Retail money is the money you and I use. It's what we use to pay for things in everyday transactions. Wholesale money is money between commercial banks and central banks. When central banks need to settle transactions among banks, they pay them using wholesale money. I think it's important to recognize the distinction, as a lot of the criticisms of CBDCs are about retail CBDCs, which makes sense because retail money is the money that we use every day. But when we look into the conversations of central bank leaders, they're more optimistic about wholesale CBDCs.
Fast forward 5 years. Do we have a central bank digital coin out there in the world that is being utilized on a daily basis?
Wholesale, maybe. Retail, no.
On the retail side, I'm much more skeptical.
I'm sure we will have wholesale, and ready to bet we will have retail, but we'll see.
Of course, central banks are still exploring the adoption of retail CBDCs. The Bahamian Sand Dollar, the Nigerian e-Naira, and China's pilot eCNY are all retail. Currently, there are more countries researching retail CBDCs than wholesale, but that's partly because retail CBDCs pose a far greater threat to the financial system. A purely retail CBDC economy removes the need for commercial banks. And look, we all hate banks, but they're necessary for a financial system. They allocate capital by providing loans and mortgages, so it's most likely that central banks will work with commercial banks to distribute retail CBDCs. Central banks really do not have the funding or the care to help you if you forgot your password at 2 in the morning. So knowing these two types of CBDCs, let's look at the pros. Why do governments want them? The blockchain technology that underpins CBDCs makes payments safer, faster, and cheaper. By being a direct liability of a central bank, CBDCs are safer than regular bank deposits and have more legitimacies than crypto. When you store money in a bank account, you're trusting that the bank doesn't go bankrupt. If it does, you might lose some of your money. Does this sound familiar?
SVB, the 16th largest bank in the US with $175 billion in deposits, is now the biggest American bank to fail since the 2008 financial crisis.
Central banks can theoretically never go bankrupt, so CBDCs are as safe as cash and as convenient as a bank account. And the legitimacy of CBDCs isn't to be taken for granted either. As of right now, crypto is only accepted as legal tender in one country, and it's really unlikely that any developed country will make them legal tender anytime soon. With central bank backing, CBDCs will automatically be legal tender and can be accepted in any business transaction like buying groceries or paying your rent. We can look at the speed of improvement through a retail and wholesale perspective. In the current system, digital payments can take days to settle. First, they need to go through a point of sale system, then connect to payment networks like Visa or MasterCard, then contact your bank, and then finally contact the other party's bank. No matter what your current view of CBDCs, this is still quite an archaic system. Retail CBDCs would allow payments to flow directly between the parties and only take a few seconds. Wholesale money is basically all digital in today's age, so on the surface, a wholesale CBDC wouldn't really change anything. But underneath the surface, the blockchain technology allows for efficiency and liquidity improvements over the current system. Not only is the current payment system slow, it's also very costly. It's estimated that the cost of retail payments in the US ranges from between 0.5 to 0.9% of GDP. CBDCs will reduce these costs by being cheaper or potentially free, which could force current payment providers to lower their prices as well. Okay, so those were the main benefits of CBDCs. Besides those, there are some other ancillary benefits, such as improved access to finances. In 2021, there were 5.9 million unbanked households in the US. A CBDC digital wallet will increase their access to the financial system since most people have a mobile phone. Improved distribution of stimulus packages. In 2020, 30 million people either never received $1,200 COVID payments or receive them late. CBDCs can deposit payments into wallets immediately. Improved monetary policy implementation. By directly changing interest rates on digital wallets, governments can directly apply monetary policy, rather than rely on banks to pass on interest rate changes. Improved tax revenue. By having access to income transactions, tax filings are automatically generated, saving time for everyone. Yeah, I don't think people are gonna like that one. Reduce corruption. Reduce counterfeiting. A lot of these benefits might sound irrelevant to a developed country like the US, but think of how beneficial it could be for a developing country. It's no wonder that the countries that have already implemented CBDCs are all developing. But right now that we've got all the pros of CBDCs out of the way, we can finally talk about the negatives. Unfortunately for CBDCs, the centralized blockchain technology that provides the benefits also provides the negatives.
This is something where they want the Fed to control a digital dollar. And guess what will happen? They're going to try to impose an ESG agenda through that. You go and use too much gas, they're going to stop it. They're not going to honor the transaction because you've already bought more than what they think.
Ron DeSantis is a self-victimizing conspiracy theorist autocrat. Oh, sorry, I had more than that. Ron DeSantis is a self-victimizing conspiracy theorist autocrat. But he does have a point about the potential overreach with CBDCs. By having direct digital access to your wallets, central banks could theoretically control where and how you spend your money. The emphasis is on the could because there's currently nothing out there to suggest this happening. But just the possibility is enough to scare people away from CBDCs. And honestly, it's a completely valid concern people should be asking before these are properly implemented. Conservatives can point to the Canadian government freezing the bank accounts of truck drivers that protested the COVID vaccine. Liberals can imagine a world where a conservative president bans CBDCs from being used at abortion clinics. And everyone in a democracy can worry about authoritarian countries that might decide what the citizens can spend their money on. And with this one concern alone, For many people, it's enough to negate all the benefits of CBDCs that I mentioned earlier. It's what the comments at the start of this video are all worried about, and central banks really haven't provided a great response to this criticism, besides just saying it's something that they're not gonna do. CBDCs also have strong privacy concerns. Having the government see and know every one of your financial transactions is potentially something that most people don't want happening, and that's more so for people in authoritarian countries. There's also risks that the system might be hacked by a bad actor, like a hostile country, or risks of the technology going down, which will mean no transactions are processed. So, after all of that, will CBDCs lead us to a cashless society? The short answer is probably not. The long answer is, if we were to end up as a cashless society, it wouldn't be because of CBDCs. In many countries, cash has already been on the decline for many years. The world is becoming more digitized every day, including how we pay for goods and services. But back to CBDCs, there's several reasons why they probably won't lead us to a cashless society. The first was mentioned before. Central banks are more optimistic about wholesale CBDCs, since retail CBDCs have larger ramifications on the financial system. If central banks pursue wholesale CBDCs, it's really unlikely that the everyday individual will notice anything has changed. Central banks also recognize the importance of cash, and the current outlook is for retail CBDCs to coexist with cash. How do we know this? Because many central banks are considering voluntarily applying size limits on digital wallets. Cash will never truly be wiped out if there's a limit to how much can be stored in your digital wallet, and it's not like the removal of these limits will be an issue. In countries where CBDCs are already launched, they're not being used much anyway. In China's pilot program, the average wallet size was 47 cents. In the Bahamas, less than 20% of people still use the e-wallets 2 years after CBDCs were rolled out, and it's a similar story in Nigeria. So for these reasons, I don't think CBDCs will lead us to a cashless society. But that's just me. Here are some of my general thoughts on the idea as a whole. CBDCs are a way for central banks to keep up with an ever-changing economy. It's pretty naive to think that banknotes should still be the primary source of central bank money just because they were used for the past 2 centuries. That being said, there's still sort of a what's the point sort of vibe, especially in developed countries. It's a solution looking for a problem to fix, as a UK government committee said. A lot of the benefits that they provide can be provided by other technological improvements. For example, in the US, the Federal Reserve released FedNow in early 2023, which improved the speed of digital transactions, and bank accounts in the US are already insured by the FDIC, up to $250,000. And in the case of Silicon Valley Bank, the government insured all the deposits. Even on the wholesale side, there's ways to improve the current RTGS system, even without using CBDCs. Also, I'm told, I don't know, I never looked into it. I can see how the benefits of CBDCs can improve the economy for a developing country, maybe one that needs to improve access to finances for its citizens. But I think the potential overreach and privacy concerns far outweigh the potential benefits. And people just really hate when the government does stuff in general. So I can imagine people protesting this. People are already protesting it in the comment sections. However, with more than 98% of the global economy currently looking into CBDCs, we'll see where we end up in 5 years. Thanks for watching the video and making it to the end. What's your opinion of CBDCs? Please subscribe if you want to see more economics related content. Bye.